Hello, this is Matt on the Moon Lambo channel. XRP's intense 750-day bear market is about to end. Fireworks imminent. That's the headline from an article on newsbtc.com, of all places. So that certainly caught my attention. And I do want to run through this, but I want to take this as an opportunity, additionally, to talk more about market cycles, how they behave. Because I think on this channel, it comes up fairly frequent. We'll talk conceptually about, where this part of the market cycle, you can see historically how XRPs behave, this or that. But I want to take a deeper dive, which I haven't really done before, on just the different phases of any market cycle. And it's not particular to XRP. It's not particular to cryptocurrency, but it's worth knowing. It's actually really, really, really important, I would say. But before we go any further here, if you would please delicately tap that like button. And if you're a fan of XRP's 750-day bear market coming to an end, go ahead and subscribe to the Moon Lambo channel in a show of solidarity or something like that, because why the hell not? And I actually had to think about it because, and I didn't pull a live coin watch and figure out if it's down to the day accurate, but that's actually about right. So you figure, pulling from memory, and this could be wrong, but I think the all-time high of XRP was January 14th, I could be mistaken again, but of 2018. So you figure 2 years, 365 days a year, so you're already getting up there. But I don't think that, because so what would that put you at 730, and then it's been 2 weeks since then roughly. So it's probably pretty close to 750 days. My, how time flies when you're having fun. I'll tell you what, pretty much all I've known, fine, I jumped in, there's this huge bull rally when I jumped in the world of crypto 2017, but the vast majority of what I've been living through since I've been in crypto is a bear market, and I'm still having a great time here because I understand how humans behave, and I do understand market cycles. But take a look at this. So here's how this piece begins. Although XRP was one of the worst performing major altcoins in 2019, it may be the dark horse of 2020. As the crypto is on the cusp of breaking an intense 750-day downtrend. The break of this long-respected descending resistance line could spark a massive trend reversal that places the embattled cryptocurrency firmly in the throes of its next major bull market. Further adding to this bullish trend reversal is the fact that XRP is currently within the spring phase of an incredibly bullish technical formation, which is historically followed by a significant rally. Now, at the time of writing, XRP is trading up just under 6% at its current price of 25.3 cents, which marks a notable climb from the daily lows of 23 cents that were set yesterday just prior to the crypto's breakout rally that kicked off overnight. XRP isn't the only major altcoin that is rallying now, and the aggregated crypto market appears to be growing increasingly bullish. It is important to note that the cryptocurrency has also found itself caught within a wick-off accumulation pattern over the past several weeks, with it recently entering the spring phase of this formation. This means that XRP's current rally could be just getting started. You can see here's @TraderXOXO stating, XRP, once in a while, you gotta stop and look around. You could miss it. Spring it. So seems very optimistic on that front. The crypto's 2-year bear trend is about to come to an end. That's the next subheading. In addition to confirming an incredibly bullish technical formation, XRP also appears to be on the cusp of breaking above a descending resistance line that has hampered its price action for 750 days. The break above this level could spark a massive bull trend that leads the crypto to post some wild gains, with these technical developments potentially marking the start of an incredibly bullish year. And you can see here's another analyst at Galaxy BTC, and writes, time to say bye-bye to 750 days of bear market. And he writes, and they wrap up by stating, because XRP is about to post a massive break of this resistance level, the rally it sees in the coming couple of days and weeks could be intense. allowing it to significantly outperform Bitcoin and other major cryptocurrencies. Interesting. Now, the thrust of this is, I'm not going to get too in depth beyond that about price action. I'm going to make a separate video to talk a bit about what's been going on in terms of price action of the market and get opinions from all sorts of analysts and traders. But I wanted to talk more conceptually, like I said, just about market cycles in general. And I do want to cite this too before getting to that. I mean, I'll be brief on this, but there's this piece from A&B Crypto titled "Bitcoin Trading Dominance Drops Below 40% on Binance's Platform." Now, that is just one cryptocurrency exchange, but Binance is massive. Absolutely huge. And so it's just worth being aware, even though it's an anecdotal incident, fair enough. Just understand that the way things are going, Bitcoin dominance as a whole, as far as it pertains to the entire crypto asset class, Bitcoin dominance is decreasing, altcoin dominance is increasing. So let's go ahead and dive into this. And this is just from Investopedia.com. Market cycles, the key to maximum returns. This is so worth knowing and in detail. Now, this was written not with cryptocurrency in mind, so understand that as I move forward, but this is a truth in terms of the way market cycles work, that it's not specific to any one asset class. The reason that this applies anywhere is because it's more indicative of how humans behave in a market where they're able to buy and sell things and speculate. This is just simply human nature at play. That's why it's transferable from asset class to asset class. It's not just in stocks, it's not just crypto. We've all heard, as it begins now, we've all heard of market bubbles, and many of us know someone who's been caught in one. Although there are plenty of lessons to be learned from past bubbles, market participants still get sucked in each time a new one comes around. A bubble is only one of several market phases, and to avoid being caught off guard, it is essential to know what these phases are. An understanding of how markets work and a good grasp of technical analysis can help you recognize market cycles. And so here you go, the 4 phases of a market cycle. Cycles are prevalent in all aspects of life. They range from the very short term, like the life cycle of a June bug, which lives only a few days, to the life cycle of a planet, which takes billions of years. No matter what market you are referring to, all go through the same phases and are cyclical. They rise, peak, dip, and then bottom out. When one market cycle is finished, the next one begins. The problem is that most investors and traders either fail to recognize that markets are cyclical or forget to expect the end of the current market phase. Another significant challenge is that even when you accept the existence of cycles, it is nearly impossible to pick the top or bottom of one. But an understanding of cycles is essential if you want to maximize investment or trading returns. Here are the 4 major components of a market cycle and how you can recognize them. Number 1, accumulation phase. This phase occurs after the market has bottomed and the innovators, and then the parentheses they write, corporate insiders and a few value investors. And again, like I said, this wasn't written for crypto, so you're going to get some words like that don't necessarily apply. That was my dog. I bet the mic picked it up. She just heard a sound outside, I think, and she looks very concerned, and she just gave a little bark there. It woke her from her slumber. She was just sleeping there. It's okay, Pete. It's all right. Come here. I love dogs. All right, anyway, sorry about that. Sorry for the interruption. Anyway, so let me just restart that sentence. The accumulation phase. This phase occurs after the market has bottomed and the innovators, corporate insiders, and a few value investors and early adopters, which is smart money managers and experienced traders, begin to buy, figuring the worst is over. At this phase, valuations are very attractive, and general market sentiment is still bearish. Articles in the media preach doom and gloom, and those who were long through the worst of the bear market have recently given up and sold the rest of their holdings in disgust. However, in the accumulation phase, prices have flattened, and for every seller throwing in the towel, someone is there to pick it up at a healthy discount. Overall, market sentiment begins to switch from negative to neutral. Indeed, it's like buying somebody else's fear. Number 2, the markup phase, stage 2. At this stage, the market has been stable for a while and is beginning to move higher. The early majority are getting on the bandwagon. This group includes technicians who, seeing the market is putting in higher lows and higher highs, recognize market direction and sentiment have changed. Media stories begin to discuss the possibility that the worst is over, but unemployment continues to rise, as do, again, it's not for crypto, as do reports of layoffs in many sectors. As this phase matures, more investors jump on the bandwagon as fear of being in the market is supplanted by greed and the fear of being left out. As this phase begins to come to an end, the late majority jump in and market volumes begin to increase substantially. At this point, the greater fool theory prevails. Valuations climb well beyond historic norms, and logic and reason take a backseat to greed. While the late majority are getting in, the smart money and insiders are unloading. But as prices begin to level off, or as the rise slows down, those laggards who have been sitting on the sidelines see this as a buying opportunity and jump in mass. Prices make one last parabolic move, known in the technical analysis as selling climax, when the largest gains in the shortest periods often happen. But the cycle is nearing the top. Sentiment moves from neutral to bullish to downright euphoric during this phase. And this is so fascinating to me because even though market cycles are so well known, even if you know it, think about what, if you want to take advantage of that, think of what you have to do. And if you're listening to this, you're probably already doing it. If I just had to guess, the average person is. And I'm not offering buying or selling advice whatsoever with this, but if you're doing it, think about this. If you've been buying over the last year, more than a year, you've been buying in a bear market when it's supposed to be freaking scary to do so. Now, I've been doing this too, but to me, it's substantially less scary knowing that this is how humans behave. And most people, even if they understand that there are market cycles, even if they agree, it's too hard for many to put money in when nobody else is doing it. It's scary. Is it really ever going to go back up? Number 3, distribution phase. In the third phase of the market cycle, sellers begin to dominate. This part of the cycle is identified by a period in which the bullish sentiment of the previous phase turns into mixed sentiment. Prices can often stay locked in a trading range that can last a few weeks or even months. For example, when the Dow Jones Industrial Average peaked in January 2000, it traded down to the vicinity of its prior peak and stayed there over a period of more than 18 months. But the distribution phase can come and go quickly. For the NASDAQ Composite, the distribution phase was less than a month long as it peaked in March 2000 and retreated shortly thereafter. When this phase is over, the market reverses direction. Classic patterns like double and triple tops, as well as head and shoulders patterns, are examples of movements that occur during the distribution phase. The distribution phase is a very emotional time for the markets, as investors are gripped by periods of complete fear interspersed with hope and even greed, as the market may at times appear to be taking off again. Valuations are extreme in many issues, and value investors have long been sitting on the sidelines. And so I'm hoping that you're thinking of XRP and what's been going on for this 750-day bear market as I'm running through this. Now, that continues. Usually, sentiment slowly but surely begins to change, but this transition can happen quickly if accelerated by a strongly negative geopolitical event or extremely bad economic news. Those who are unable to sell for a profit settle for a break-even price or a small loss. And then number 4, the markdown phase. The fourth and final phase in the cycle is the most painful for those who still hold positions. Many hang on because their investment has fallen below what they paid for it, behaving like the pirate who falls overboard, clutching a bar of gold, refusing to let go in the vain hope of being rescued. It is only when the market has plunged 50% or more that the laggards, many of whom bought during the distribution or early markdown phase, give up or capitulate. Unfortunately, this is a buy signal for early innovators. Hear that? This is a buy signal for early innovators and a sign that a bottom is imminent. But alas, it is new investors who will buy the depreciated investment during the next accumulation phase and enjoy the next markup. There you go. So market cycle timing. A cycle can last anywhere from a few weeks to a number of years depending on the market in question and the time horizon at which you look. A day trader using 5-minute bars may see 4 or more complete cycles per day, while for a real estate investor, a cycle may last 18 to 20 years. So fascinating, is it not? And that's why, just be aware of the specifics of this. This is well documented. This is how humans behave. And so that's why when I tell you that I am bulletproof emotionally when it comes to the price action of XRP, this is why, And it's still fun to follow. I enjoy following the price action, but I am not afraid in the least. But anyway, that is it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!